Hey everyone, and welcome back to the channel. If you've been watching the crypto markets lately, you've probably felt that sinking feeling in your stomach. It seems like every time we think we're seeing a recovery, the floor drops out from under us again. Bitcoin, Ethereum, XRP. It doesn't matter which one you're holding, the charts are looking pretty red across the board. The global crypto market is looking weak, with the total market cap slipping below that key psychological level, now sitting around $3.23 trillion. That's nearly a full percentage point down in just the last 24 hours, and it reflects a slow, shaky trend that's affecting all the major coins. So what's really going on here? Is this just another Tuesday in crypto, or is there something bigger at play? Well, if you look at the sentiment, things are grim. The Crypto Fear and Greed Index, which is a great thermometer for the market's mood, is currently sitting at just 18. That's not just fear, that's extreme fear. When the index is this low, it means investors are incredibly anxious. People are panic selling, expecting further price drops, and that fear can become a self-fulfilling prophecy, driving prices down even more. We've seen this before, of course, but it never gets easier to watch. Now, when the market gets this turbulent, I always like to turn to the seasoned experts, the people who have been through these cycles before and can offer a more grounded perspective. And one of the biggest names in financial analysis is Tom Lee, the head of research at Fundstrat Global Advisors. Tom Lee has been a long-time Bitcoin bull, and he's famous for his data-driven price predictions. He's not someone who gets swayed by daily market noise or emotional hype. So when he speaks, people listen. And recently, he shared his thoughts on why we're seeing this massive downturn, and his insights are crucial for anyone trying to navigate this chaos. According to Tom Lee, one of the primary drivers behind this crash isn't something that's happening within the crypto space itself. Instead, it's all about the broader macroeconomic environment. Specifically, he's pointing the finger at the Federal Reserve and its recent policy shifts. For months, the market was pricing in the expectation of multiple interest rate cuts this year. Lower interest rates are generally great for risk assets like crypto and tech stocks. They make it cheaper to borrow money, which encourages investment and speculation, pushing prices up. Everyone was getting ready for the Fed to start loosening its grip. But then, the inflation data came in hotter than expected. Inflation hasn't been cooling down as quickly as the Fed wanted, and that threw a massive wrench in the works. Instead of talking about cutting rates, the conversation has shifted. Now, there are whispers that the Fed might have to keep rates higher for longer, or even, and this is the real fear, consider another rate hike. This complete reversal in expectations has sent shockwaves through all financial markets. The bond market, in particular, has been reacting strongly, with Treasury yields climbing. When yields on safe government bonds go up, it makes risky assets like Bitcoin and Ethereum look a lot less attractive by comparison. Why gamble on volatile crypto when you can get a decent, guaranteed return from a bond? Tom Lee explains that this higher-for-longer interest rate narrative is sucking liquidity out of the market. Investors are pulling back from risk, deleveraging their positions, and moving into safer havens. Bitcoin, being the flagship cryptocurrency, is often the first to feel the impact of these macro shifts. And when Bitcoin sneezes, the rest of the crypto market catches a cold. Ethereum and XRP are no different. They are highly correlated with Bitcoin's price movements, so when the big one goes down, it drags the altcoins down with it. It's a chain reaction. The fear of tight monetary policy creates a risk-off environment, which leads to Bitcoin selling off, which in turn triggers a wider altcoin crash. But Tom Lee's analysis doesn't just stop at the Fed. He also points to another significant factor that is contributing to the current market weakness, the aftermath of the Bitcoin halving. Now, historically, the halving, where the reward for mining new Bitcoin is cut in half, has been a major bullish catalyst. It reduces the new supply of Bitcoin entering the market. And basic economics tells us that when supply decreases while demand stays the same or increases, prices should go up. However, the period immediately following the halving is often marked by volatility and consolidation. Lee notes that there's a classic sell the news phenomenon at play. Think about it. The halving was one of the most anticipated events in crypto for over a year. Speculators and traders bought in heavily in the months leading up to it, driving the price up to new all-time highs. Once the event actually happened, many of these short-term players took their profits and exited their positions. This wave of profit-taking creates significant selling pressure, which can temporarily overwhelm the market. We've seen this pattern in previous cycles as well. There's often a lull, a period of sideways or downward price action for a few weeks or even months after the halving, before the true effects of the supply shock kick in and propel the market to new heights. Lee believes we are currently in that post-halving consolidation phase. The market is digesting the recent gains and shaking out the weak hands before the next major leg up can begin. Furthermore, let's talk about Ethereum and XRP specifically, because they have their own unique challenges on top of the macro pressures. For Ethereum, while the recent Denkin upgrade was a major technological success, making transactions on Layer 2s cheaper, it hasn't translated into the immediate price surge that some had hoped for. There's also the ongoing uncertainty around the potential approval of a spot Ethereum ETF. The SEC has been dragging its feet, and the sentiment in the market is that approval is unlikely to come in May. This regulatory ambiguity is hanging over Ethereum like a dark cloud, suppressing investor enthusiasm. Without a clear catalyst like an ETF approval, Ethereum is struggling to break free from Bitcoin's gravitational pull. And then there's XRP. The story of XRP is, as always, deeply intertwined with its long-running legal battle with the SEC. While Ripple has scored some partial victories in court, the case is far from over. The final outcome and the size of any potential penalties are still unknown. This legal uncertainty creates a huge overhang for XRP. It's difficult for major institutions and cautious retail investors to go all in on an asset when its regulatory status is still being decided in a courtroom. Every new filing, every judicial ruling, and every deadline in the case sends ripples, pun intended, through the XRP price. Until there is a final, conclusive resolution to the SEC lawsuit, XRP's price action will likely remain choppy and highly sensitive to legal news, making it particularly vulnerable during broader market downturns. So, to recap Tom Lee's perspective, we're facing a perfect storm. We have a hawkish Federal Reserve spooking investors with the threat of higher-for-longer interest rates. We have the natural post-halving, sell-the-news consolidation phase for Bitcoin. And we have specific headwinds for major altcoins like Ethereum and XRP, related to ETF uncertainty and legal battles. When you combine all of these factors, it's no wonder the fear and greed index is at extreme fear. The market is being hit from multiple angles simultaneously. But here's the crucial part of Tom Lee's message, and it's the reason he remains a long-term bull. He sees this period of fear and price correction as a massive opportunity. He emphasizes that the fundamental long-term thesis for Bitcoin and crypto has not changed. The adoption of Bitcoin ETFs has been a monumental success, bringing in a new wave of institutional capital. The halving has fundamentally altered Bitcoin's supply dynamics for the better. The development on networks like Ethereum continues at a rapid pace. These are the things that matter in the long run. Lee often reminds investors that the best times to buy are when there's blood in the streets, or in this case, when the fear and greed index is flashing extreme fear. These are the moments of maximum pessimistic sentiment, and they are often the points of maximum financial opportunity for those with a long-term vision. He argues that this downturn is shaking out the speculators and allowing conviction buyers to accumulate at lower prices. He believes that once the macro environment stabilizes and the market finishes digesting the halving, we are set up for a very powerful second half of the year. He hasn't backed down from his bold price predictions for Bitcoin, still seeing it reach well into the six figures by the end of this cycle. So, what does this all mean for you, the average investor? It means it's a time for patience and perspective. It's easy to get caught up in the daily price swings and the fear-mongering on social media. But if you zoom out and listen to experienced analysts like Tom Lee, you'll see that these corrections are a normal and healthy part of a bull market cycle. They are not a sign that the game is over. They are a sign that the market is resetting for its next move. This isn't the time to panic sell. Instead, it might be a time to reevaluate your portfolio, stick to your long-term strategy, and perhaps, if your financial situation allows, consider dollar-cost averaging into the projects you believe in. The fundamentals that made you bullish on crypto in the first place are likely still intact. The technology is still being built, adoption is still growing, and the macro case for a decentralized, finite asset like Bitcoin has arguably never been stronger. Thanks so much for watching today. I know it's tough out there, but hang in there and remember to think long-term. If you found this breakdown helpful, please hit that like button and don't forget to subscribe for more in-depth crypto analysis. Drop a comment below and let me know your thoughts on the market. Are you buying, selling, or holding? See you in the next video.